Morning, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be having a very interesting Monday, where normally we usually have less and less events on the economic calendar, but today, as the title of the video suggests, I will be expecting to see more volatility, especially from two US stocks. And one of them is Nvidia, which is currently implementing a 10-to-1 stock split. And the other one is Apple, which will be having the Worldwide Developers Conference. And in most of these events, you usually get updates on the new product development, be it hardware or software that the company has been working on. So everyone, feel welcome to the session, and thank you for joining in. So hello, Lamik Buire. Thank you for joining in. Yes, the comment is very well appreciated. We'll be looking into adding dates to the title of the video or to the graphic of the video. Morning, Malombe. Morning, Shadrach. Thank you guys for joining the session. So, as always, I would like to begin with a disclaimer that this session is purely educational. It's not a recommendation to trade. It's not financial advice. So you should always do your own due diligence and, of course, practice proper risk management. So on the next part of the presentation today, I'll be talking about the economic calendar and the things that we are currently expecting in the economic calendar. So if you look at today, we have quite a number of things going on. So right from the morning, we had manufacturing sales from New Zealand data, which was low impact news. We also had household spending and a speech from RBA Deputy Governor Hoza. So all this has been low impact, and going towards the end of the day, we should be expecting to see some activity. Sorry, I'm looking at the wrong calendar. So we have some bank holidays going on for the day. One of them is in Australia. And of course, in China, they also have a bank holiday. So low volatility is expected from both economies. So for the rest of the day, we don't have anything major. So notice that the current event being expected is the Centix Investor Confidence Survey for the Eurozone and a speech from German Buba President Nagel at 12:30 p.m. So besides that, we don't have any other news for Monday. So we'll be expecting more news later in the week, especially Tuesday, which is tomorrow morning, where we'll be looking at the UK jobs report. First, we'll be looking at the claimant count change. This is the number of people who are claiming for unemployment insurance for the first time. In this case, we expect an increase to 10.2K from the previous reading of 8.9K. So we'll also be looking at the average earnings index, which have been increasing by 5.7% quarter over year, as reported in the previous reading. And now we're expecting this number to remain the same, as well as unemployment to remain at 4.3%. So that will be the key highlight for the markets tomorrow. Then on Wednesday, we'll be looking at Chinese CPI data, which is a measure of inflation in China. So we'll be getting both the consumer price index and producer price index reports, and all this will be happening at 4:30 a.m. Then later on, we focus on GDP from the UK at 9 a.m. before focusing on US inflation. And as we all know, and we have been talking about this for some good time, CPI is the new NFP, meaning that the measure for inflation, consumer price index, tends to be one of the most volatile sessions for US dollar traders, as well as US equity indices. So whenever you see the CPI data, we know that we're expecting some good movement in the markets. This will be happening at 3:30 p.m. So of course, core CPI is expected to have increased by 0.3%, whereas CPI month over month is expected to have increased by 0.1%, which means that the annual inflation is expected to stay the same at the current level of 3.4%. So later on in the day, at 9 p.m., we'll also be getting the US interest rate decision. So the Fed is expected to hold interest rates at the current level of 5.5%. So notice the difference in monetary policy between the US and other economies, where we saw Canada cutting interest rates by 25 basis points. Also, we saw the Eurozone cutting interest rates by 25 basis points. And of course, this National Bank of Switzerland, Swiss National Bank cutting by 25 basis points. So those are three economies that have already cut interest rates, whereas the US is expected to be holding rates high. So this difference in monetary policy, of course, is expected to strengthen the dollar, whereas we see these other currencies weakening against the dollar. And of course, there will be a press conference later on at 9:30 p.m. So Wednesday seems to be the most active day for the week. Then we'll get jobs data from Australia on Thursday in the morning at 4:30 a.m. Then producer price index for the US at 3:30 p.m. on Thursday. Then fast forward, we get to Friday. So in this case, we expect the Bank of Japan to maintain interest rates at the current level of 0.10% or less. So then later on, we'll get the Bank of Japan press conference. Then towards the end of the week, we get the preliminary University of Michigan Consumer Sentiment Survey. So as you can see, we're expecting volatility to only be climbing from Monday, get more active on Tuesday, and most active on Wednesday when we have US CPI as well as the FOMC press conference. So besides that, we'll be expecting more events happening in the week. So I'll be showing you more highlights. So today is the Worldwide Developer Conference Day for Apple. So what to expect is that the conference has always been the event where the company announces new software capabilities for its devices. However, over the last few years, the software news out of WWDC has been upstaged by hardware announcements. So rather than focusing on applications at recent WWDCs, Apple has used the gathering as an opportunity to unveil its M-series Apple Silicon chips, the next generation Macs, and most recently the Apple Vision Pro mixed reality headset. So we have been seeing these events being about more hardware announcement than software, but then for this special one, there's an expectation that we'll be seeing more software updates rather than news about new hardware. So Apple pushed its hardware announcements out ahead of WWDC. So in April, the company launched the M3 powered MacBook Air, both 13-inch and 15-inch. In May, it released an all-new M4 chip along with the latest iPad Pro and iPad Air, with no additional hardware expected at the conference this year. It looks like WWDC will once again focus strictly on new software features, specifically new AI capabilities for iPhones, iPads, and Macs. So in this case, there's a good chance we could be seeing a new announcement of AI integration in Apple devices, and this has the potential of leading into good volatility in Apple shares at market open in the New York Open. So that's one of the key things to focus on today. So then there's the issue of Nvidia stock split. Nvidia announced a share stock split of 10-1 in the last earnings report, where it beat both earnings as well as revenues, up over 266% compared to the same quarter last year. And now we saw the stock hitting $1,200 as of the close of the market last week. And that was an all-time high. And today we're expecting the stock to start opening at around $100 and something. So what is a stock split? So a stock split is where after trading, if a stock is seen to be very expensive, the company can decide to multiply the number of shares that everyone is holding, but at the same time divide the value of the share. So a 10-1 share stock split means that Nvidia will be trading at a smaller number than last week. So if you check the closing price as of last week, you'll notice that it was trading at above $1,200, but the opening price will be different. So I'll just search this. It's right here. So you can see that the stock is set to open about 90% down. So don't be surprised. This is not a loss on the shares. So for anyone holding Nvidia shares, let's say you're holding one share, then as at the market open, you'll have 10 shares. So the number of shares is multiplied by 10, but then the value of each share is also divided by 10. So the closing price as of last Friday was over 1,200. So you can see it was $1,209. Now we are seeing that the market is due to open but the price will be 120.89. So simply, everyone gets more shares, but the price also drops, so thereby maintaining the same valuation. So a stock split doesn't change the valuation of the company as well as the valuation of the shares. However, it makes it cheaper for employees and retail traders to afford the shares. So for a person who would not afford one Nvidia share at $1,200, now they can buy one share at $120.89. So that's all there is to a share stock split. But then it's usually more positive. It's usually taken as something that is very positive. So in this case, we are expecting that that is a vote of good confidence. So a stock split is a vote of confidence from management that the stock will hold its value, and the stock price typically increases. This is a S&P and Dow Jones indices, senior analyst Howard Silverbrat. So let's look at the charts and try to understand what might be going on. So in this case, I'll be sharing the MetaTrader 5 trading platform and show you what typically happens in a share stock split. So this is a chart of Apple shares, and as you can see, in 2019, there was this big stock split. So the stock split basically increased the number of shares, but also lowered the price of each. So it was a 5-to-1 stock split. So the shares moved from around $500 to around $100. But then, since the share split, you can see the trend of Apple shares and how it has performed. So over the past couple of years, what we have seen is Apple continuing with the bullish momentum. So yes, not as sharp as the previous one, but you can already see this has been the trend. And today at market open, we'll be expecting to see a new all-time high for Apple shares. Not all-time high in terms of price, but in terms of valuation, because there was some time when price was above $500. But then considering the stock split here, now we are looking at a new all-time high in terms of the company's valuation rather than the price of each share. So in this case, as at the close of the market last week, we saw a 96.75, and we could be seeing the market breaking and going for $200 per share. So that will be a big expectation for the day. So besides that, we have quite a number of things in the charts. So I'll be doing the usual. So we look at the dollar index, majors, as well as indices. So the dollar index managed to make a very strong comeback on Friday last week. And now we're expecting the dollar to remain strong as other central banks are going for rate cuts, but the US is not expected to be going for a rate cut later this week. So in this case, with a very strong dollar index recovery, we have seen other currencies going down. So the Euro USD managed to have a big sell-off last week on Friday. But then today, the market opened with a gap lower and has continued to move downwards. And this is as a result of the European parliamentary elections that were happening last week between Thursday and Sunday. So this has led to a panic selling of the euro, and this could be the path for the day. Then we have the USD trading against the Swiss franc. So after breaking this trend line, you've seen the market come back, and now it's retesting the trend line again. So in this case, it's a wait and see to see whether the market will be bouncing or breaking this area. So we observe to see whether the market will be bouncing or cruising higher. So given the strong dollar, there's a good chance we continue seeing some further upside. So for pound trading against the US dollar, there was a big sell-off. Of course, that has not ended. So today, as the market opened, we are seeing some further pressure to keep pushing the pound lower against the dollar. So in this case, I will be observing these levels: 1.227 price level. And of course, we have the 1.26844 as a potential target. So as we trade the continuation of the strong dollar against the pound, so it's the same activity even for the New Zealand dollar pair. So for New Zealand USD, we saw the big sell-off happening last week, and today I expect to see some form of continuation. So the dollar trading against the Canadian dollar made a big break last week, and now we are seeing some further upside momentum. So zooming out here or going to the forward chart, then looking at this, then it's pretty clear that we have had a successful breakout. So in this typical type of patterns, the usual expectation is that once the market has failed to form lower lows, you see some weakness in the trend, and now if the trend reverses, then you observe the upper trend line. So in this case, after the break of the upper trend line, the usual expectation is that the market rallies towards the top of the pattern, which is a high. The high that we saw here, this was around the 16th of April. So in this case, there's an overall expectation that the dollar continues making strides and eventually gets to 1.38444 for USD card currency pair. So for AUDUSD, you can see an attempt to move backwards, but overall, we know that the dollar is currently pretty strong. The market has been facing lower highs as well as lower lows. So in this case, even though, yes, the Australian dollar is attempting a comeback, the overall expectation is that the bearish momentum continues. So in this case, it's also a case of wait and see to see what happens around this area, to see if there's any evidence of sellers entering the market. And hopefully we get to enjoy the strong dollar as it recovers against other currencies. So as for the yen, we have seen an attempt to move downwards, which was faced with a very strong support, and the market moved back upwards. So in this case, we are seeing a dollar that is pretty strong and approaching previous highs. So the previous highs we have seen recently is around this area here. And of course, we already know that there was this one time when we hit an all-time high. So in this case, the overall expectation is that the US dollar continues gaining against the yen unless there is any form of intervention from the Bank of Japan or the Ministry of Finance. So yes, the market is facing some form of resistance here, but but the overall expectation is that the market keeps moving higher. So silver managed to make this pattern. So yes, we had the double top formation. So market moved higher, moved and formed a high that was lower than the previous one. Then further downwards, a low that is lower than the previous one. And now it seems like the market is in a flag on the 4-hour chart. And now the most recent price action seems to be bullish momentum after bouncing from the lower trend line. And the overall expectation is that we continue seeing a recovery in silver, perhaps to the $30 price level. So gold is also doing something similar. So after the 4-hour chart, notice the big sell-off here, an attempt to rally, and then we got another big sell-off, and there's this support area here at 2282. So the market has not yet hit that support area. So after the big sell-off that happened last week on Friday, today we are seeing more of an attempt at recovery. So judging from the 50 minutes chart, we don't have much of a price action yet. So I'll be very patient on this one, waiting to see if the market either breaks higher or lower. But there's more likelihood that we'll be seeing gold attempting to recover compared to moving further downwards. So in this case, I would be observing this 15 minutes range to see when it's broken. And if it breaks towards the upper side, then that could be an idea to go long. So it hasn't broken yet, so it's a wait and see kind of scenario. So there was a big sell-off in oil, over 5% last week. And then towards the end of the week, we saw the market making some good recovery. So let's look at the 4-hour chart. So this was a big sell-off. Then towards the end of the week, the market made some recovery. And of course, we have this key level support at $80.87 price level for Brent oil. And then given the rate of recovery we experienced last week, there's still more room for upside potential. So we could potentially see the market getting to 80.87 price level, which was a previous support, now turned into a resistance. So US equity indices really struggled to make new highs on Thursday and Friday last week. So from the 4-hour chart, apologies for that. So from the 4-hour chart, this is what we had. So an attempt to form a new all-time high, which was faced with the market moving further back downwards. So in this case, it shows some level of weakness, and we could be seeing the market making a pullback for a while before continuing with the bullish momentum. And of course, if the US Federal Reserve goes all hawkish and decides to hold interest rates with the potential for holding even higher for longer, then we could be seeing the stock market take a step back downwards. However, as we have seen, as is the case, whenever you have this form of pullbacks on the US equity indices, we normally see the buyers coming in and pushing prices higher. So in the last 2 weeks, we had this pullback and the market made a very fast and steady recovery. So looking at the previous all-time high, it was right around here. This is for the S&P 500. So the market broke here from the new all-time high on Friday, and today it's potentially going to move backwards. So a previous level that used to work as the resistance is now potentially going to be the case for the support area. So as long as the market keeps pushing downwards, I would be expecting some form of pullback, but the overall trend is bullish. So looking for bullish positions is more in order compared to looking for short selling positions. So the Nasdaq is also similar. So you can see the candlesticks are almost the same. So now the market is pulling back downwards, but we should be looking for evidence of buyers entering the market to be looking for bullish positions as we enjoy the continuation. So for the Dow, there was an attempt at recovery last week. So if you look at the 15 minutes chart, you zoom out, then you notice that we've had this form of trend line holding on pretty well. And now it seems like the market is playing at a value area, and we are seeing evidence here from the pattern here, which looks like a morning star. There's a good chance we could be seeing the market starting to push higher from this point onwards. So from the 1 hour chart, this is how it looks like. So there was a big sell-off about 2 weeks ago. So last week was more of recovery, and we could be seeing that recovery extending this week. So Bitcoin managed to hit our target, which was the previous high, the top of the pattern. So this was 21,976, immediately pulled back downwards, which means that we are still stuck in this range. So in the long run, this has been the pattern. So we managed to break the upper trend line. So if you look at the brown line, the market managed to break and then pull back downwards. So at some point, we should be expecting to see some form of continuation, but not yet. Right now, it seems more of a ranging market with nothing much happening between the weekend and today. So this has been the story of Bitcoin over the last 3 days. So it's more of a consolidation phase. So at some point, we should be expecting to see the market making a breakout. But for intraday trading, it seems more likely the market will be bouncing from here and heading towards the upper trend line here. So for Nvidia, we managed to break a new all-time high above 972, went to 1211, and today the market will be opening at around $121 per share. So of course, there should be some form of volatility going into the market open. So European equity indices didn't like the outcome of the European parliamentary elections. So what we are seeing here is a big sell-off this morning, and this is expected to continue. So for the Euro 50 cash index, also a big sell-off. The French 40 is the most surprising one, made a big sell-off here. So if you compare between the closing price on Friday and the lowest price today, the stock market was down 2.7%. And of course, we know that the new candidate after the French president dissolved parliament, the potential for the new candidate coming in and winning the elections is high. And in this case, we could be seeing the next candidate going for Frexit. So that's a new term that we should be familiarizing ourselves with. It's similar to Brexit, but in this case for France. So Frexit could become a common theme over the next few weeks, where the nation of France might be looking to exit the European Union. So yes, the European parliamentary elections have caused a big panic selling, including the UK. So we had a big sell-off in the FTSE, the UK 100. But now from the price action we saw in the last 1 hour, it seems likely that buyers are entering the market again. So changing the sentiment here. So after the big pin bar in the current strong green candlestick, it's a sign of recovery. We could be seeing the market going higher. So that's a key concern. But then for the German DAX, we have seen a big sell-off, which might continue for the rest of the day, even though in the last 1 hour, we have seen a very strong pin bar indicating a rejection of lower prices. So after the market bounced off the lower trend line here, notice the candlestick that was formed. So this is a strong rejection of lower prices. But then in the current candlestick, we are seeing an attempt further to keep moving prices downwards. So if you're looking for a trade today, if you're not waiting for Apple and Nvidia later in the day when the stock market opens, then you might be looking at the bearish momentum in European equity indices, especially the German DAX, the French 40, and of course the Spanish IBEX index. So that's it for the day. Thank you very much, guys. Thank you for your time. Let me check on the questions as we approach the end. So morning, Malombe. Morning, Shadrach. Hello, Onyango. Morning, Tridak. Thank you for joining the session. Morning, Francis. Where did the euro-dollar gap today? Of course, the gap is the difference between the closing price on Friday and the opening price this morning. So there was a panic selling as a result of the outcome of European parliamentary elections. And a lot of guys that were elected in the parliament are anti-globalist and basically going to potentially reverse some of the key policies that have been implemented in the EU. We could be seeing or looking forward to the end of the Ukraine war. And at the same time, we could be seeing some steps being taken against overregulation of various industries. So it's a new dawn for Europeans in this case as they look to undo some of the damages that have been done on the economy over the last 4 years. Bonds and yields in relation to dollar strength is a good question. So we know that the bonds in the US or the bond yields have been increasing. And this is based on increased bets that the Fed might continue holding rates higher for longer. And as a result, we are seeing also the dollar strengthening again. So we should be looking at a potentially very strong dollar over the next couple of months, especially if the Fed meeting this week leads to more hawkishness, more expectations that rates might stay higher for longer before the inflation gets to the target of 2%. So a good question from Joseph Gisharu. What do you mean? The Nvidia will open at 120. What if you had an open position at a price of 700? So technically, it's divided by 10. So your open position is still there, but at $70 rather than at $700. So you might not be impacted by share stock split. So do gold and silver move in the same direction? This is a good question from Ernest. No, they don't always move in the same direction, but there is usually often a very strong correlation between the two. So when there's a strong directional movement in gold, it might be similar with silver, but not always. So correlations are not permanent. They happen every now and then. So for gold and silver, they tend to be quite positive, but it's not always moving in the same direction. So a question from Mutuma. Can you consider the today EU gap today as SVG, where price might retrace to it? Well, in common events where we don't have any major changes, we expect the market to at least cover the gap. That can happen immediately on Monday or the following day. But now, what we are looking at here is a panic selling that led to a change in the trend. So notice how the market was moving higher. Sorry, I'm trying to plot a horizontal line here. So notice how this was a very strong resistance area. There is a lot of price action around this area. Then the big sell-off here, breaking the previous lows. And we are talking about the lows of the last 3 weeks. So having seen the Euro USD making that break and expecting the Fed to make an interesting decision later in the week, which is expected to strengthen the dollar further, then I wouldn't be very positive about the Euro making a comeback and closing this gap. So in this case, I would be more in anticipation of further selling pressure. From a lower timeline, you can already see that there is more pressure to keep pushing the pair down. So I would be betting on much weaker Euro against the dollar, having seen them cut interest rates last week. And potentially this week, the US holds interest rates at 5.5%. So I'd be more bearish than bullish on this one. So no need to be looking for the market closing the gap. So from Wangari Patrick, with last week's key news on interest rates for the euro and CAD, can we now look forward to a strong dollar for a prolonged time, bearing in mind that the first possible cut is in September? Of course, yes, for the next couple of weeks, it makes more sense to be buying the dollar against these currencies where their central banks are considering cutting interest rates. So, kindly repeat on the German DAX and the French 40. So, both indices seem to be on a panic mode after the European parliamentary elections. So, in this case, we are seeing some very strong support. So, the German 40, notice from the 1 hour chart, we have a major support area here. The market made a big dive here. There was a strong rejection indicating a reversal or a bounce from that area. But then the current candlestick is indicating some further bearish momentum. So I would be waiting to see more evidence of sell-off, but I would still be bearish on this one, having seen the market trade within this flag for a while. So notice that this was a flag that lasted a couple of weeks. So notice that the support along this area here. So I would be observant to see if the market eventually breaks this support area again. So for now, it seems more bearish and it's correlated across board. So we are seeing more equity indices being on a roll. So the biggest momentum was on the French 40 cash index. But then from the price action we are seeing, there was a very strong bounce, but there is also attempts to keep pushing the market further downwards. So I'll be waiting patiently to see how it plays out. So for now, we are seeing these attempts at recovery. So just be patient and wait. Maybe after the open of the New York session, we'll be seeing more activity, but I'll be looking for more bearish positions rather than bullish. So the reaction from the parliamentary elections is only indicating further bearish momentum. So yes, we are seeing the market attempting to form a recovery also for the Euro 50 cash index. But then I wouldn't be very positive for this one. It's not a major support area, so there's a good chance that the market might continue further downwards. So a good question here. You mentioned that the guys elected to the European Parliament might reverse a number of decisions previously made. Does it mean that the euro can regain strength in the near future? Well, I'm not very hopeful, and main reason for this is based on the monetary policy by the ECB. So, despite not having achieved their inflation target of 2%, the ECB members voted on a rate cut. So now they are cutting interest rates into inflation, which is very negative for the euro. So over the next couple of weeks, we should be expecting to continue seeing a much weaker euro. So a good question. What's your take on Kenya's Finance Bill 2024 and its effect on the dollar Kenya shilling currency? So the Finance Bill, it's a whole different topic from what we are discussing today. But for the Kenya shilling currency, judging by the amount of loans we are getting from various institutions, I would be expecting the Kenya shilling to strengthen further against the dollar, perhaps even get back to 120. So in that case, I'm quite positive about the Kenya shilling continuing to regain some value against the dollar. Also considering the monetary policy that the Central Bank of Kenya did not cut interest rates in the last meeting, so left them at 13.0%, which basically implies that they are still tightening policy, which could lead to a strengthening of the shilling. So should we be scared of another spike in the dollar and shilling currency? I don't think so. So we should be expecting that the Kenya shilling continues with the current momentum against the dollar. So seeing more inflows of dollars, especially the deals that the president struck in the US, then that should potentially lead to further recovery of the Kenya shilling. So that's it. Thank you, everyone. Thank you for your comments. Thank you for your participation. So remember to like and share the live video. If you're watching this on YouTube, then you should find some links in the description below One, you'll find some links for registering for a new account. And of course, if you are just beginning your trading journey, feel free to check out the FX Pesa YouTube for the Novice Pro series, which is a course designed to help you begin your journey by understanding what is Forex, what do you need to learn, how do you do these technical analysis. And from there on, you become a much better trader. So if you're watching this on Twitter, remember to like the video, share with other people in the trading community, and hopefully everyone gets to benefit from this. So thanks everyone, and of course remember to check out the latest episodes of our two podcasts. So you have the Bullish Banter podcast. We have a very important episode coming up. Make sure to check it out. And of course, for the Financially Incorrect podcast, we have a new episode coming up. Make sure to check it out on your favorite podcast platform. So thank you very much, guys, and I hope to see you on the next session. Remember, these sessions happen every day from Monday to Friday at exactly 11 a.m.